Welcome back and taking a look at the markets. They are inching higher and at the day's highest point right now. Along with that, it's Nifty 50 as well. That is now above that 24,600 mark. But along with that, it's been a glittering trend for both gold and silver, with one staying near the record high, with the other one at 14-year high on the back of safe haven demand. Geopolitical tensions and the prospects of Federal Reserve rate cuts are also some of the other key triggers. But will this run sustain? That's the question. And what are the brokerages pricing in? Let's go across to Ashesha, who is here with an overall picture of what's really happening within the precious metal basket. Ashesha.
Well, yes, precious metals are on fire in the global market. Gold is at an all-time high and silver too is sitting at the highest level that we have seen since 2011. First up, let's put the spotlight on the yellow metal then. It is up nearly 5% over the last month and it is now trading above that $3,500 per ounce mark in the global market. Expectations of a rate cut by Federal Reserve in the meeting that is scheduled to happen in the rest of this month is aiding the move in the precious metal market. And as you can see on your screens, $3,530 per ounce. That's where the yellow metal is trading in the global market, up 5% on over the last 1 month. Meanwhile, if we track the moves over the last few years, it gave a return of nearly 13% in calendar year 2023, followed by a whopping 27% return in the last calendar year. And this year so far, gold is up nearly 33%. And several factors continue to aid the yellow metal market. Precious haven, safe haven demand seems to be aiding. Geopolitical tensions have been surging over the last few years, especially in West Asia, and that continues to aid. And demand from central banks has also been on the higher side. So these are the primary three factors which are aiding the yellow metal market. Meanwhile, brokerage houses continue to remain very bullish even after the run-up that we have seen so far. So Goldman Sachs has now given a target price of $3,640 per ounce by the fourth quarter of FY25. JP Morgan at 3675 and Morgan Stanley has given an ambitious target of $3,800 per ounce by the fourth quarter of this calendar year. But it's not just about gold. Silver too is shining in the global market. That one has also shot up quite a bit. It's up 9% over the last 1 month and it is now nearing that $41 per ounce mark. Remember, it did cross that $41 per ounce mark briefly, although it has corrected a tad bit over the last 24 hours. It gave marginal returns in 2023, followed by a staggering 22% return in calendar year 2024, and this year so far it is already up 38%. But remember, silver is not just a precious metal, it has several industrial applications as well, and that continues to aid. Rising demand for electric vehicles, chips, data centers, solar continues to aid the silver market. And remember, United States also added silver to their critical minerals list. So these are the two factors which are aiding silver metal prices in the global market. But it's not just gold that brokerage houses are bullish on. Brokerage houses continue to remain bullish on silver as well. Bank of America Merrill Lynch has given a target price of $45 per ounce for the fourth quarter of 2026 and JP Morgan at 45.2. So yes, precious metals clearly are on fire in the global market.
Oh, yeah, absolutely they are. Let's try and understand whether the precious metals will continue to shine on or not. We've got Jonathan Bharat from the ETO Group joining in on the show right now, the CIO. Jonathan, hi, morning. Great to be speaking with you. Jonathan, what's fueling this move on gold? Because when silver was still undervalued vis-a-vis gold, one would have thought that the trade would move to silver, which it did. Silver too is at a decadal high, but gold continues to hold, the top slot.
Well, look, I think generally when you look at what we're seeing and all the factors to why people were buying gold, and also a technical factor as well, and that's also linked into it, that we're seeing sort of a much more aggressive run on gold. We still like silver, but when we just focus on gold, gold has actually technically broken out of what we call an ascending triangle, and that puts it on a measured move, which actually sees it higher. But I just generally feel there's just this weight of demand and this weight of need by investors to actually invest in gold, and that's forced it a lot higher. Nobody's out there shorting gold, everyone's buying.
Right, okay. Jonathan, hi, morning. This is Snehi also joining in. Brokerages, like my colleague Ashesha was just highlighting, they continue to be very bullish on both gold and silver. How much of an upside still are you seeing for both of these precious metals?
I still think there's a lot more upside, particularly silver. But when you look at gold, I think they're the levels and they're a measured move level. So when you come to a record high, it's very hard to put where you think it'll trade to, because sometimes the markets just behave like that. So, but in this case, when you come up to 36.40, 36.70, it is what we call a measured move. And that sort of suggests that when we had this breach, we had this consolidation while silver was moving higher, gold will then move up to these levels. So at the moment, I think it's still quite aggressive. And quite interestingly, the US dollar is sort of starting to firm up, yet gold is still looking quite promising. So those moves up to that 36.40 and 50 seem to be where the market is heading at the moment.
Jonathan, but I'm interested to know, Jonathan, do you have any targets on gold and silver, given the fact that all of these brokerage houses are looking for higher targets even from these levels? Any levels that you are tracking?
I mean, look, we've generally been bullish gold and silver for some time, and that's portrayed in a lot of the reports that were put out. I like to think that gold has that psychological level at, that 3,600 type of level. I think when we look at that, that is quite reasonable for it to get to those levels. And at 36.40, I think is the same. Silver, I think a lot of people are actually underestimating the move. Now, the last time we got close to these levels, or the record highs at $50 an ounce, and that was when the Hunt brothers sort of tried to corner the market back in April 2011. But I think silver's got more push in it. And I think silver, in my mind, remains the one that you could actually look at ultimately for a longer term trade to reach that US $50 an ounce. And there's a lot of factors behind it that support that. Your colleague did mention some of them, but I generally feel the thirst for silver, particularly out of China, and its move into that environmental sustainable area, will be a factor to contend with. And that's why I think silver over time will outpace that ratio and actually head up to that US $50 an ounce.
All right, but along with that, Jonathan, help us understand what are the other factors that can really lead that rally with respect to the silver, because $50 per ounce in the international markets, that will be almost a 20% jump from these levels. But along with that, we do understand that it has a lot of usage in the industrial side as well. So how is that demand and supply thing shaping up? And what will be the other triggers for the silver to have that up move?
I think the focus is, there's two focuses which we're looking at. Obviously, the reclassification of silver as a rare earth out of the US. And when we look at China moving into the green economy, the electric vehicles, all those things we've talked about before. And when I look at China, I see the demand and the march towards this is quite prudent and quite solid. And I get a sense that when we went to that sort of not oversupply yet in silver, but when the Chinese economy starts to move into this space, and we see that as evidenced by the demand and the production of electric vehicles, we get that sense that this demand is not going to peter out. So I feel that it might not happen in this current run, but over time, I think it will continue. And I think it'll be that demand and that reclassification out of the States that'll force the silver hand to trade to that level.
Jonathan, just shifting focus a little bit from gold and silver and putting the spotlight on copper. This is also a metal that has seen a very good jump in year-to-date prices, up 12%. Any take on copper, any outlook on where copper prices could be heading?
I think it's very tricky, copper, at the moment. We had that quite a large correction, where it sort of came undone because of the tariffs that were put in place and the reclassification. I think copper itself reached a balance area down there, when we looked at it. And I guess where we're looking and where we're trading, $4.60 a pound, I think it's still quite cheap around this level. I get a sense also that copper might have more of a lift as well, given that we're looking for those rate cuts in the States. And I think that'll support the local industry or support industry in itself. if we get a little bit more out of China in terms of where we think, remember the manufacturing sector in China has been quite sort of depressed, and I think you might get some more stimulus by the government. So when I look at those two factors, I think we could have a reasonable bounce here for copper from these levels.
All right, we'll definitely watch out for that. But so good having you, Jonathan, on the show.